Hey guys, it's Kyle from InvestiShare here. I hope you had a great weekend. Looks like the crypto market did. I'm pretty stoked about that. There's a couple things I want you to look at just to play it a little safe, especially on the 30-minute charts. We're starting to see some bearish events, but if we react to it properly, we can make decent gains. So I'm going to show you my chart, and we'll dive right off into it. Alright, so when we were last talking in the last video, we were looking at a potential reverse head and shoulders. This head and shoulders converted into a double bottom formation instead with the same technical target. So when we broke out, I entered off of the confirmation because I saw the resistance and we had a strong pump, so it kind of got away with me, so I didn't want to enter off of a green candle, and luckily I didn't because we got the rejection and we came down and we saw a confirmation bounce and I entered off this green candle right here. So this is my point of entry. I have taken profits. I've taken half my profit so far at the second take profit zone right here. Because I saw when we came up, we were starting to form a double bottom formation, so I figured that'll give us the momentum we need to break past this, and luckily we did. So now, if you're still in this position, awesome, great job, because you probably were able to get out in the second take profit zone right here. So if we bring this all the way over here, you can see that we wicked into it. So awesome amount of gains there, guys, if you were able to capture that. So that's about 9.6%, 9.7% without leverage. So awesome. You don't need to use leverage in these prices, guys, and make decent money. But right now, we're starting to see some bearish activity. I know it's just a red candle, but if we switch over to the 30-minute chart, we can see that there's a rising wedge formation coming out into play. Now, typically, these formations, the target is the bottom of the formation, like the bottom area of support. So roughly around here, 18,000. So what I'd want you to do before entering something like this, not financial advice, your stop loss would be right above this area of resistance. So let's get out to the short tool here. Let's pretend we were entering this position. So we got a stop loss right here. So a maximum amount of about 2.4% if you use your stop loss. And if we got our take profit, it would be a 12% gain. So this is a 1 to 5 risk to reward ratio. So that's a pretty good trade. I would enter something like this. Typically, you want to find something that's 1 to 3 or better. So this is a 1 to 5. So this is definitely something you want to jump into, but with a lower amount of capital because you have a 2% loss for something like this. This is a high volatility type of trade. So what I would want to wait for before entering this, even though we're getting the breakout kind of sort of right here, I want to wait until we see this double top formation play out first. So we want to wait till we get this neckline to break, a candle, a full body candle to break past this before entering any short position. And we have to look out for local areas of support as well. So we got support here, and we got support here. This chart, if you guys aren't familiar with this chart, this is actually Lux Algo Indicators. This is drawing the support levels for me. It uses volume indicators, like touch points, all that fun stuff to be able to provide you the support levels it automatically draws for you. So I'll give you the link down below this video. I'd highly recommend checking it out. These guys build the most amazing indicators that make trading like 10 times easier. And a lot more passive. You don't have the draws made trend lines. These trend lines right here are actually drawn by their indicators as well. But anyways, so we got 2 take profit zones we have to worry about because of these support levels. So I would actually, before taking profits here, I would wait until you start seeing a bounce, like a double bottom formation or anything like that, then take profits. And then move your stop loss at break even at that point. And the reason why is because you don't want to take profits too soon in case it does break right through it, because there are times in the crypto space where it'll just melt right through important levels of support and just continue on down. So we're in a bear market, so sell pressure is stronger than buy pressure, so it's a lot more likely to just melt right through support levels. So yeah, like I said, wait until you start seeing a bounce here before closing some of your position, because even though you're taking profits and you're doing it safely, it does affect your risk to reward ratio when you do stuff like that. It does make it at 1 to 2. And the reason why it's important is because you want to keep the same kind of strategy and structure with all your trades. So, if your next trade becomes a loser, it might actually like wipe out all your gains. If you're doing just 1 to 3 risk to reward ratio trades, you would require 3 losses to go back to breaking even from your previous win. If you won this trade, it would require you to lose 5 trades in a row with the same percentage risk to reward ratio in order for you to go back to break even. So that's why it's kind of important to just make sure you take profits responsibly as well, not just, put your stop loss in a responsible area as well, in conjunction to that. But yeah, that's most of what I have for you, but there's a couple things I want to talk about as well, is the DXY. You can see that we got the rejection off of this broadening wedge formation, support level that's flipping as resistance, which is good for the crypto market. We are starting to find support here, some consolidation. I think we're on the weekend, we're on the holiday, I believe, right now. I think it's a bank holiday right now, so it makes sense for there to be consolidation, and we might see a drop on Monday if it wants to continue to go back to this area of support right here. And if that happens, then crypto will go up. And the number of Bitcoin addresses that hold 1 Bitcoin or more is still growing, which is great. And if we go over to the net unrealized profit and loss chart, it shows that it's updated to show us that we're more in a capitulation state than we were back during the COVID crash. So things are actually worse than they were back in March of 2020 during the COVID crash. So that's kind of interesting, how much this inflationary damage has impacted us with all these the Fed rate basis points being increased and all that fun stuff. So that's something to take account for. So I'm not saying that we're at the bottom, but I am saying that we're very, very, very close to the bottom. If we, the bottom part is coming in very soon, guys. So just take that into account before you do your trades. But yeah, this is the next one that we're looking at. It's a short position. I know there's a lot of people that don't like shorting, but if you're holding Bitcoin, like I do, this is where I would sell some of my Bitcoin and then reaccumulate at these levels so I can get more Bitcoin with the same amount of money. And so when we're back into a bull run, we make a ridiculous amount of money when it starts to scale again. But yeah, guys, that's everything I've got for you. If you have any questions about this, you know how to reach me in the Discord. And have yourself an amazing day. Thank you.